Hello, welcome to A VO's Journey. Today we're going to be talking about when you should go full time as a voice actor. This topic really excites me. I went full time as a voice actor about 2.5 to 3 years into my journey, and I can remember very clearly the debates I had with myself, the planning to go full time, the worry about some of the decisions I was making, like how they would affect insurance, how they would affect the stability of my paycheck, if you will. And so I want to talk to you guys about that today. It's great to be back. I know it's been quite a while since I made a video, so thank you guys for bearing with me. Make sure if you are new and you're just seeing this, if the algorithm gods are sending me in front of you, make sure you like and subscribe. And check out our links below for VO Journey and the VO Journey Academy. It's to help you start and grow your voiceover business. Okay, so very, very wonderful. And we've got an Easter special coming up, so be prepared for that. The idea of going full time is why I was so excited about getting into voiceover. One of the reasons, right? I mean, the first reason is I'm a creative person and I really didn't feel I was having a chance to create myself. At the time, I was helping a lot of other people create, but I wasn't doing a lot of it myself, and voiceover was one of those things that really gave me that opportunity. So when I went into it, I was basically, working from 10 p.m. to 2 a.m. in the morning, and I was doing the best I could with the schedule I had. And as when I first started, I really just wanted to be hired. I wasn't really thinking how I could necessarily turn this into a full-time gig. But as some time went on and I started to grow my business, I realized, hey, I could do this. So, some of the challenges that presented itself and some of the things that we need to overcome in order for you to go full time in this, right, is one, the overall always challenge above everything else is how do I create a business that brings in stable work? Do you know what I mean? So that's one of the first challenges that we face. And the second challenge is what are all of the other things that, for example, if I'm working a job that they take care of that I might now have to take care of since I'm not working, I don't have an employer, right? Technically, I'm my employer. These are things that you have to think about. Okay, and we're going to kind of go through that today. First off, I want to say, don't forget, this is a business. So there are some things that you need to do business wise, right? You need to have an LLC. Can you be a sole proprietor? Absolutely. The taxing is not different between a single member LLC and a sole proprietorship. However, there is some legal, I guess. I'm not an expert, so this is not advice. This is just, my opinions about what it is. But there are some protections using an LLC. You know what I mean? It does limit your liability, as it says in the name. But either way, I incorporated with an LLC, so that's what I recommend. And you want your business structure, so in lies the taxes. Taxes are a big part of what we do. It's a depressing part, but it is a big part of business because you are responsible for all of your taxes now. And of course, before you were responsible, but your employer, the money comes out without you even knowing it, without you even seeing it, without you even having to be in charge of it. So the employer halves your taxes with you. I mean, like Social Security and all this stuff like that. So Medicaid, Medicare, like they half that. So you only end up paying 7.5% instead of 15%, which is a big deal. When you become self-employed, you're going to pay the full 15%. And they call it being double taxed. I mean, it is what it is. And that's a part of the business. Now, down the road, depending on how much you end up making, you can change your entities where you pay yourself an actual paycheck, etc. But most of us don't. The fees aren't worth it because of where we are, because the fees end up eating up what you would end up paying for taxes anyways. So it's kind of like, which one do you want? So the point is though, is you need to look into that. I recommend getting a bookkeeper, someone who can help you with those things. A tax person. They're not as expensive as you might think they are. They're really not, and they are well worth it. Trust me, well worth it. Okay. So that aside, let's move into building a stability. What I did is I took my paycheck, the amount that I was making, and I doubled it. And I did that because meaning what I wanted, meaning that I said to myself, I need to double how much I was making for me personally to feel comfortable going full time. And the reason that was at the time was because I was like, man, what if I lose half of my income one month for whatever reason? How can I survive on that? So I wanted to try to make sure that I could lose half of my income. So I took my salary, I doubled it, and I said, okay, that's the number I need to be making every month. Then I said, okay, well, how am I going to consistently make that every month? What do I need to do? What kind of business do I need to set up? And that's where I realized I needed to set up multiple streams of revenue. So, for example, coming from multiple platforms, do you know what I mean? Doing multiple things, whether it was not just paid per job, but royalties, et cetera, et cetera. I started to really look at how could I be on multiple platforms, how could I bring in revenue from multiple places, so that if this platform over here or this client over here had an issue, or it wasn't working with me, or something happened, I had still revenue coming in. So that was a big thing. I had to really look around and say, okay, I need to have a variety of revenue coming in for me to feel relatively safe for going full time. Okay. So as time went on, I was able to build that up and double my income, and it took me about 2.5 to 3 years. My first year, I made very little. I only made like $800. Okay, the whole year. And then my second year, I was able to grow that to a little over $20,000. And then going into my third year, that's when I was able to go over six figures, and that has been what I've done ever since. But the 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 challenge with going full time was again, that nervousness. So the second part of it is, how do you tackle the nervousness of going full time? I think one thing that I started doing too is I started to put some money into savings. So I thought, if I could also save like maybe 6 months of a actual, like, monthly, what I would need for a month to live off of. So if I had like 6 months in savings, that would also make me feel better, right? Because then I would know, no matter what, I had a backup plan as well. So I always say with people working full-time jobs, remember, they're like your biggest investor right now, right? Because they're paying for you to survive while you're building your business. And utilize that. So utilize every penny that comes in from your business. This is another aspect of this. Don't do what I did, because I think I could have done it faster, but it took me longer because of this. So every bit of money that you bring in from your business, do not fold it into your current household spending. Use it to spend your business, but put that away for your 6 month reserve, okay, for your business. Because if you fold it into your family business, now you might not have a choice because you might need the money. But I'm just saying, try to keep them separated, because the more you can separate your business, this wasn't a lesson I learned until later on. And this also has tax implications, right? Separate the business. Start now by even, you don't need to take a paycheck, right? Unless you really, really need the money, you don't need to take a paycheck from your business. But start to, create a separate business bank account for your business anyways. The money goes into that bank account. You pay taxes. You pay for your expenses for your business, but do not take money from it yet. All the money, let it build up in the account. Let it be, save that money so you have a 6 month reserve before you go full time. That will give you, one, a lot better feeling that you can weather any storm, and two, by the way, you can decide you want a year. You can decide however much you want. But the point here is that you need to let that build up, okay? And that will help you be a lot more comfortable going full time, okay? What I was saying to you is as you grow, what I want you to consider is that treat your business like you are an employer. Okay, yes, you're the employee as well, but treat your business like you are an employer, meaning like you are going to give yourself a monthly, weekly, bi-weekly, whatever paycheck. And that doesn't vary. I mean, can you give yourself raises? Okay, sure, but you know what I'm saying? You want to get in this habit of giving yourself like a paycheck. You take a monthly amount of money, and that's it. You don't take more. You don't take less. You take. I mean, you could take less, but you need to take that paycheck, if you will. All right, and a paycheck could literally mean, especially if you're a single member or a sole proprietor, you transferring money from, your business account to your personal account. But the point is, I'm trying to make is get in the habit of treating it like it's a you're an actual employer, right? As well as paying the taxes. Because remember, you're going to have to pay taxes. Now, as a single member LLC and a sole proprietor, you will end up paying taxes all of it will be combined under your social or your tax identification number, but it won't be separated. Like the business won't pay taxes and you won't pay. It'll be together. If you were a C corp or you were an S corp, right? You would end up paying, the business would pay taxes and you would pay taxes because you would be employed by the business. You'd actually have a W-2. But in this particular case, for most of us, we're the total entity. So we pay it, and even with your spouse or whatever. If you are like filing married jointly and stuff, you are going to end up paying together as a household still, right? The business isn't separated technically. But for our purposes, no matter that, we need to act like it is separated so that we can manage it as if, we're what we're used to and how that would, because if you are constantly taking money out of the bank, trust me, it is a mess. You can't find where you are. You can't ever get an idea of what your business, what revenue you have, et cetera, et cetera. So the more you put that down on paper, the more you have a structure that will also help you a great deal feeling comfortable going full time. I think, but for me, the biggest thing was, like I said, the two biggest things in the end, three biggest things. One was feeling confident that I understood my business structure and what I needed to do business, like, from business wise filing, whether it's LLC with the state corporate commission, or the IRS and all this stuff like this, all understanding that. The second thing was making sure that I had multiple revenue streams, from different platforms, different clients. I had personal clients. I was able to audition. I felt confident getting work auditioning. You know what I mean? I had work coming in that was from clients that I already worked with. I just had all these different areas that money was coming in for my voiceover business, so I felt very confident with that. And then the third thing is that I had a reserve built up in my bank account, and I felt confident that if something did happen, that reserve would carry me through, okay, until things picked back up. Here's another thing. This is just a helpful side tip. Voiceover is not month to month. We live month to month because that's how we kind of been programmed, at least most of us, through an employer. What I mean by that is if you've been in voiceover for more than a year, I would say more than 2 or 3 years, you learn that this is cyclical. It goes up and it goes down. There's some months where you're like, the world is ending, and there's some months where you're like, swimming in the dough. Like it's you have tons of bookings, and the other months it's like crickets. It's like tumbleweeds rolling by. You're like, where is there? But this happens year after year. The economy goes up, the economy goes down, the economy goes up, the economy goes down. You being a sound business owner, running your business, managing your money that comes in through your business, will help you weather all of this. But I can tell you, after doing this now, I think it's almost 9 years, that, it goes up and it goes down. Business comes in, there's a great month, then there's a month where it's crickets. So what I'm saying to you is that's why a reserve helps a great deal. It allows you to feel like you're okay if something was to happen. Does that make sense? Okay, very, very important. All right, guys, thank you so much for watching. Hope this video helped you out today. It's something that very excites me because when you have a doable plan, when you have something laid out in front of you, all you have to do is start taking the steps to reach those criteria in order for you to meet your goal. So I'm very excited for you. Keep me posted. Comment below on where you feel like you are in your journey, whether you're just starting, you started to build a reserve, you started, really focusing on multiple streams of revenue. And if you feel like you want some more coaching on this and stuff, check out the link below at VO's Journey Academy. We'd love to have you. So much to offer, and this is the kind of thing we'd love to help you with. All right, guys, thank you so much for watching. Have a wonderful, wonderful Thursday. Talk to you later. Bye, everybody. Bye-bye.